Hello and welcome guys to the section 6 of this course. This section is divided into 9 lectures which cover every wave within a complete Elliott wave cycle and reveal market sentiment associated to each wave. Wave personality has the advantage of bringing human behavior more personally into the equation. In the first 5 lectures of this section, you will study wave personality of the corrective waves within a complete Elliott wave cycle. This includes the wave 2, wave 4 in a 5-wave sequence and waves A, B and C in an ABC sequence. Elliott believed that any freely traded instrument spends 60 to 75% of its time in correcting the impulse waves, and it is also a fact that labeling of corrections is much more difficult to master and requires greater study and practice. That is why I have decided to offer the complete knowledge on corrective waves first. And then lectures 5 to 9 are aimed at studying the market sentiment associated to each impulse wave and how to trade them. Now that you are familiar with the overview of this lecture, it is time to study each wave in a correction and sentiment attached to these waves. Wave A. In early days of correction, retail traders see this just as a small pullback before the next leg of advance continues, whereas the professional traders see this first major technical crack as a start to the bigger correction. As you will study later, wave A can be subdivided into 3 waves or 5 waves depending on the type of correction. A waves divided into 3 subwaves generally indicate weak correction, whereas A waves consisting of 5 subwaves indicate a strong correction. Wave B. Always comprised of 3 subwaves, wave B is probably the most complex of corrective waves on any degree. That is why wave B is often linked to sucker plays and bull traps. Sentiment linked to wave B is technically weak, resulting in non-confirmations. Wave B can have both a very narrow advance in comparison to wave A and also an advance well above wave A's starting point due to mixed fundamentals. Aggressive buying and selling within wave B support and resistance parameters takes place as market retests the price over and over again. The trick here is that as a trader, whenever you say to yourself that there is something wrong with the wave analysis on a particular market, chances are that it is a wave B. B waves are always subdivided into 3 waves irrespective of the correction type. Wave C. Wave C is the third and final wave in a correction, and they have the characteristics of a third wave just like the third wave within 5-wave advance. The indecision during wave B tends to fade away as prices fall sharply. Advancing C waves within downward corrections and larger bull markets are often seen as a start of new downswing by novice traders, especially as they unfold in 5 waves. Once this 5-wave move within the correction comes to an end, professional traders see the change in fundamentals as an opportunity to continue an uptrend. C waves are always subdivided into 5 waves in all types of corrections, as you will study later. Let's summarize what we have learned about wave A, B and C using an illustration. Therefore, based on what we have studied in this lecture, we can conclude that wave C presents the best trading opportunity, followed by wave A and wave B. In the next 4 lectures, we studied the 4 major types of corrections that take place within an ABC correction and what is the best time to trade each correction.